sponsored by the Securities and Exchange Commission of Nigeria.
You're watching Eye on Nigeria's capital markets, the show that casts the spotlight on West Africa's oldest and largest stock exchange and its broader capital markets. I'm Wole Famrewa. This is one of several factories run by UK consumer goods company PZ Cussons. The company arrived in Nigeria well over a century ago, and like many foreign businesses, is looking to take advantage of the largest consumer market on the African continent. But it's only one of a handful of foreign businesses listed on the Nigerian Stock Exchange. New portfolio investors seeking exposure to Nigeria's consumer and oil story on the bourse are often disappointed because, while there are 200 listed companies, only about 40 companies offer shares that are reasonably liquid. The rest are relatively small companies that hardly trade.
Well, what you find is that the Nigerian Stock Exchange was established back in 1960 and started operations in 1961. In the early years, listing was more by suasion and some level of compulsion by earlier companies who have listed, and typically what they listed were fixed income securities. But things began to change during indigenization, where multinational companies were asked to actually sell off certain portions of their shares or stake to the Nigerian community, also to the government. So you found out that most of the multinationals are listed within the period of indigenization, and also when they divested from post-indigenization, when they divested from their shareholding at that time.
There was a thought that we should have Nigerians participate more in Nigerian businesses. And the Nigerian Enterprises Promotion Decree was established.
Between 1970 and 1980, the wave of listings on the stock exchange was driven by the former military government's indigenization policy that used the country's oil wealth to establish greater control of the economy. Foreign companies were forced to sell their stakes to Nigeria, and the government established new businesses in different sectors of the economy. Over that decade, several foreign firms decided to leave the country, and this led to the listing of the likes of First Bank, which was previously owned by Standard Chartered Bank, and Union Bank, which used to be a unit of Britain's Barclays Bank. Many companies, however, retained a minority stake in their businesses when they were listed on the bourse. These include the downstream units of U.S. oil company ExxonMobil and France's Total, which remain listed today. Others include consumer good makers Unilever, Nestle, and PZ Cussons.
PZ Cussons Nigeria started over 114 years ago. Its main business was trading. We used to trade cashew nuts, cocoa, groundnuts, export them to the UK. And it only went into industrialization and manufactured goods in the late 40s to 50s. In the 1972 to be precise, when the company listed on the stock exchange, it was really the right time for the business to arrive at that point. And it also coincided, of course, with the Nigerian indigenization law.
I really think that multinationals tell the story of the Nigerian capital markets, because when you look at the traditional multinationals like PZ, Unilever, Nestle, GSK, they've basically evolved with the Nigerian stock market. A number of them came on the market because of the indigenization decree, when companies were being encouraged to allow Nigerians to participate in their success. But they've also been companies that have done well. Many of them have been very well run over the years. In line with global trends, successive governments in Nigeria pursued a policy of privatizing state-run businesses, which led to a flurry of listings in the 1980s and 90s. Nigerian foreign investment laws were later reviewed to allow foreigners to own up to 100% equity in companies operating in Nigeria. As a result, the parent companies of listed firms such as Diageo's Guinness Nigeria, Dutch brewer Heineken's Nigeria unit, Nigerian Breweries, and PZ Cussons increased their shareholdings and once again became the majority owners.
Over the last 10 years, PZ Cussons has paid over 10 billion naira worth of dividends, which has obviously gone to shareholders, local and overseas alike. We have visited the market a number of times in the last 30 years. The latest one was a rights issue in 2006, where we generated over 5 billion naira in order to support some of our capital projects, including power generation. The company has evolved quite a lot since its entry into the stock exchange. It has grown from a very small shareholder base to today, where we have over 80,000 shareholders, and we have grown to almost 4 billion shares.
A new class of multinational companies is now emerging, Nigerian firms making a play for the African continent. The most notable include United Bank for Africa, which operates in 19 African countries. Another firm blazing the trail is Oando. It is the first and only Nigerian company with a dual listing on the Nigerian and Johannesburg Securities Exchange. The most notable of these emerging multinationals is the Dangote Group, run by Africa's richest man, Aliko Dangote. The group currently has 4 companies listed on the NSE, including Dangote Cement, which has investments across Africa.
We transited from a trading concern. We're into banking, trading, mainly trading, and then we decided to do a backward integration. We transformed the company into a manufacturing group, and out of that, we had 4 major companies which we eventually took to the market.
According to Dangote, there are a number of benefits to listing these subsidiaries, not only for the firms, but also for the entrepreneurs behind them.
You are having what we call external directors. They are bringing their own experience on board. They are also having you as the majority owner in check, making sure that yes, you are always mindful of the other, co-owners, and you will behave actually much better. You see, because whatever that you do, you have to come and tell people the exact story. It's not something that you keep it within the space of your bedroom or the space of your office, not telling people exactly what is going on. Any step that you take, you have to actually explain, and there are rules and regulations.
PZ has received a significant amount of benefit by being listed on the stock exchange. First and foremost, the visibility that it has given to it, not only to our consumers through the brands, but obviously in the circles of government, in the circles of financial services, etc. That visibility is always helpful when a business operates in a difficult environment. Also, the ability to raise capital has given it the opportunity to grow much, much bigger in the country. We have always reinvested all dividends, profits, etc., that we have been able to generate in Nigeria.
So you see that companies have higher brand equity by being listed. Secondly, they have access to capital in most cases, be it fixed income or equity directly. But most importantly also, when companies come to list, when they go out to talk to their bankers or borrowers, the first box they get checked is that, look, because you're listed, it shows that you're transparent, your books are out there for people to review, there's a certain level of corporate governance that you achieve. So that also helps in significant way in terms of how you deal with your bankers. So that will also lead you to have a lower cost of borrowing from your bankers because you already have all of these things in place. The alternative for you would have been that if you were not listed, then the bank will have to do a certain level of due diligence to what's it called, to confirm all the information you're giving them. But by being listed, you get all of that.
When you list on an exchange, the level of scrutiny is very, very high. So the average person feels, oh, these are companies that are well run. And it affects your brand, both in terms of your traditional business, but in terms of you being able to raise capital, not just in your market, but in other markets, which is why I talk about the Nigerian multinationals who have leveraged their success in Nigeria to grow their businesses outside of Nigeria. And for a country where we're trying to have more inclusive growth, wealth creation and wealth distribution is very, very critical.
You don't want to remain as a private company where if anything happens to you, your children might disagree among themselves, and the next thing is to look for somebody or to close down the business, and that's it. If you look at previous leaders in business that have not actually listed their companies, and you look at some of us that have actually taken the pain of listing their company, The difference is clear.
Following the spate of listings driven by government policy in the 1970s and 1980s and the subsequent privatization of state-owned companies, no multinational company has listed on the bourse since 1979. Analysts say this is due to the high cost of listing and the relative ease for foreign firms to access alternative funding sources.
If you look at it on the surface, it's perhaps true that, okay, some people have quipped about the fact that it's expensive to list. So yeah, for some people, but for multinationals, I'm not so sure. But I think perhaps the real reason is the fact that they're able to source all their needs, both locally and from offshore. A lot of them have the backing of their parent companies, who for Nigeria, for them, Nigerian market is a substantial market, so they pay attention to it. And I'll put it to you though that even if the exchange went to zero in terms of come and list for free, you won't still get a foreign multinational list tomorrow. So I'm not sure it's so much the issue of cost. Of course, you have to be competitive and all of that, but I'm not sure. I think for them is that there's no apparent benefit for them right now. That must be the honest truth. There is no benefit. There's no compelling reason. And that's because they can put 5, 6 of the biggest banks together in a room and can raise as much as they want within a very short time. And some of them have access to foreign funds that come in at very, very, good rates for them. So there's no reason. And then all the issues they have to grapple with, with the listing, reporting requirements, transparency, they don't have to deal with all of that. So they get all the money without having to go through all this so-called stress. So I think it's more that than really the cost. But the cost may be a factor, but I'm sure it's way, way down the line.
The Nigerian capital market is also grappling with capacity constraints to provide funds to large companies. This is one reason why the Dangote Group is contemplating a listing on the London Stock Exchange.
When you look at the size of the company as at today, we will find it very, very difficult to sell 30% of the company down because of the size. So the only reason why we are going to London, we are going to London to be able to access more funding. Today, if Dangote Cement want to go into expanding or acquiring a new company that's worth $10 billion, for example, which we might be doing in the next 5-7 years, it will be difficult for us to launch that kind of merger or acquisition from Nigeria, because of limitation of funding. It's one of the main reasons that we're going to London.
After the break, we find out what authorities are doing to bring more companies to the bourse.